here's some crazy stats about Walmart. Walmart's e-commerce, their online business grew at 20%, which is really impressive. And they say that soon 95% of the population will be reachable within 3 hours or less by Walmart delivery services. Currently, that already sits at over 91% of Americans who can be reached within 3 hours or less. Walmart also says that some price increases will be necessary even at reduced levels of trade or margins. And while they will do their best to keep prices as low as possible, even with the reduced China-US tariffs, some prices are going to have to go up because they're not going to be able to raise price, or they're not going to be able to absorb all of it in their margins. To this, Donald Trump says, "No, Walmart, you should eat all of it." And to this, Walmart says, well, keep this in mind. And this was a shocker to me. 60% of suppliers to Walmart are U.S. small businesses. That was mind-blowing to me. U.S. small businesses are the ones who are most damaged by high rates, by a credit shock from a potential Moody's downgrade, and who are suffering the most with the smallest margins because of broad tariffs on every trading partner that we have. China, yes, is a huge source of electronics and toys for Walmart, but it was mind-blowing to me that 60% of their suppliers are actually U.S. businesses. Now, they believe that we're going to start seeing accelerated and delayed impacts of tariffs in May and June. So this sort of sets up that, what's going to happen to the economy? And that's exactly what Walmart is saying. Walmart is already seeing worse situations in Mexico, but so far, much better expected situations in the United States. And that's why they're maintaining their full year guide, which Goldman agrees with. Goldman Sachs is actually impressed with them maintaining their full year guide, and they support Walmart's full year guide. But by removing their Q2 guide, Walmart is kind of saying, yeah, we just don't know how all of this is going to play out yet, so we'll let you know when we figure it out. And I think, frankly, that's just where a lot of U.S. businesses are today, in the good old wait and see. Hey, quick reminder, if you want to earn a 5% yield plus all of the upside in my real estate startup, we are offering a non-accredited investor round where we will pay you a 5% yield plus you get all of the upside in the stock when your stock converts in the future. It gives you an opportunity to diversify away from rich stock market valuations, diversify away from most tariff risk, diversify away from the craziness of the treasuries market, especially with these Moody's downgrades. You diversify into fixer-upper real estate, which is what I believe I do best. This is my baby. I call it my little Berkshire Hathaway. Now, maybe I'm biased, but I've got over $5 million of my own money invested into this business, and I'm so excited for what I think we're going to be able to do with this business over not just the next years, but the next decades. So if you want to invest in my real estate startup, go to househack.com and know that I will do everything for this business in my power to make sure we can do the absolute best that we can. Make sure to read the solicitations and disclosures on the HouseHack website because there is risk with every investment.